Ceasefire news sparked a global relief rally. Oil plunged again for a second day. Tech soared and volatility collapsed. Let's walk through these key moves in the next 5 minutes. As always, if you want the full trade idea and a deeper analysis, watch the full video at marketscholars.com with the link down in the description or the pinned comment down below. Okay, let's start with what moved the markets the most today. And the biggest driver was a geopolitical ceasefire, right? The ceasefire between Iran and Israel. You can see the impact it had across all these different asset classes, sparked a global risk-on reaction. Oil prices plunged a second straight day over here, 5% this time, dropping well below its 200-day moving average. Yields fell, the 10-year yield fell 2.5 basis points, fell below its 200-day moving average, and stocks rallied sharply across the board. The S&P 500 gained 1%, led by mega caps and tech, as you would expect, while the VIX dropped double digits here, 12%, confirming a discontinued collapse in volatility. Bitcoin surged today, getting up a little, continuing to move higher back above its moving averages. But gold did not, right? Gold continued to move lower. It's now flirting with the 50-day and moving into that gap down to the downside. If you take a look at the sector rotation, it favored what the areas you want it to favor: technology, communication services. Discretionary didn't do too hot. You like to see that up there. Healthcare rebounded after lagging behind here lately, and financials ended up being a strong performer. Despite falling yields, the fall in the 10-year yield. So that's your quick pulse check on today's biggest market movers, from falling oil and yields to a surging technology sector in the S&P, with less breadth than what we would have liked to have seen on a move like today. If you find this kind of market breakdown helpful and useful, please make sure to like the video and subscribe to the channel below. Share it with someone who also trades and invests like you do. And now let's dive deeper into what this all means and where the market could be headed next. So one big thing we learned here today was that today's market action was a textbook risk-on reaction to easing global tensions, right, which put a little pressure and volatility in markets recently, as well as some more clarity from the Fed from Powell's testimony to Congress earlier today. Oil prices, you can see, continue to move lower after the ceasefire in the Middle East, and we kind of expected that to be the case. No one really thought the war would drag on that long. It also has taken out a pretty key inflation risk. A lot of people are talking about this rise in crude oil and the aftermath of this war driving inflation back higher again. So that helped, taking that away helped push yields. If you look at the 10-year yield, it helped push yields lower and push the growth stocks higher. Meanwhile, the Fed's more patient tone reinforced some expectations for a rate cut later this year. We heard from one yesterday talking about a cut in July, which is unlikely. But Powell pretty much left the door open for the two cuts that are currently being priced in, not only priced in by the markets, but also projected by the FOMC at their last dot plots. You can see that reflecting in Bitcoin moving higher, and obviously the big drop, even bigger drop today in the VIX than what we saw yesterday, down nearly 12%. But under the surface, it's still a relatively narrow market. We're not getting a breakout up above the 400 level on the number of stocks above the 50-day moving average. Leadership was pretty much dominated by the mega cap names, with cyclicals and defensive lagging, as you would expect, just not by as much as we saw. So we've got strong momentum, just not quite as broad-based as we would like it to be. Something I'll be watching closely and share with you even in more detail in today's analysis, full analysis. As always, if you want the full breakdown, including today's trade setup, technical charts, and intermarket analysis, check out the full Market Outlook video on marketscholars.com. This is part of our foundation membership, designed for active traders who want deeper insights, not just the headlines. You can join right now for just $29 a month and unlock today's video. Or if you'd like to do the $299 for a year, you can get the 2 months for free. Again, thank you very much for watching. Don't forget to like, share, and subscribe if you found this helpful. And we'll see everybody here tomorrow.